Let's now bring in Tom Lee. He's Fundstrat's managing partner. Hey, Tom, it's good to see you. Thanks for being here today.
Yeah, great to see you, Scott.
How you feeling about your everything rally, Tom?
Well, it's really being put to the test today. Look, I know investors don't like when there's policy turmoil in Washington, but anybody just needs to look at the last 30, 50, 100 years and realize, when Washington plays tough, that's not a time to panic on stocks. I don't want to sort of say it's a guarantee, but it's almost always been a great buying opportunity. So I think that there's been a lot of damage done to like the growth in the tech trade and the S&P technicals. But to me, this just seems like a precursor to a consolidation before a big move higher. So, I'm still strongly in the camp that we have an everything rally into year end.
I mean, it just feels like there are selective narratives going on, whether it's my friend Farmer Jim or you. The narrative that best fits your story. You're suggesting that, again, the volatility that we're witnessing here is due to what's taking place in Washington, more so than a fairly dramatic move in interest rates, not necessarily the level, but the speed in which we've moved.
Yeah, and the only reason I might say that, and again, Scott, I'm going to just say the future is uncertain. So, anything I say isn't anything with certainty in terms of outcomes. But if anyone said that the economy is going to have trouble with 1.5% interest rates or even 1.8, or that the thesis for owning Apple or Amazon or Facebook or tech broadly is threatened by a 1.5% 10-year yield, we know that it doesn't sort of stand the test of time. So I think at the moment, there is a general relationship. And I was actually, personally sort of wondering, should we maybe dial back the idea of being overweight FANG if rates are rising? But then as I think about sort of the structural arguments about why demand for tech products is still going to go up and why the U.S. economy is showing incredible resilience, and even the stock market's incredibly resilient. We had, huge debt default last week. I think these are reasons why investors need to look through this short-term pain, and I don't think it really changes the probabilities of a big rally into year end.